Hey everybody, welcome back to another episode of the Compliance Coach. Today, in times of disruption, we talk about the disruptive element. That means how compliance can be a competitive advantage in banking. Three things that you will learn. Number one is how to get compliance from an overhead to a business opportunity. Number two is what are the 3 steps towards competitive compliance, and 3 is what has an infinite mindset together with compliance. What are the same elements? In the words of Simon Sinek, whenever you go for an infinite game, it is better to chase the dream and not the competition. We as compliance officer very much faced with words or sentence like, hey, I'm paying here your salary, you just a cost center whenever it comes to discussion with RMs. So I tell you of how with compliance we can chase the dream and contribute to the bank's profit. My name is Ralf Ebert. I'm Chief Compliance Officer, 20 years of experience in the business. I am here with this YouTube channel to bring you topics of an importance, make it clearer and understandable for experts, but as well for beginners. So join me in this adventure and in this episode, thinking and impacting compliance differently. So the question is why compliance and the business could work together, because they are normally antagonists of the game. On one hand, the business, on the other hand, normally those ones who make business life very difficult, the compliance officers. Now, take 2 examples, for instance. You have one compliance team who is just strict to the risk appetite strategy, implements it by dot and semicolon, and does not shift towards, more enhanced view on the situation. At the very end of the time, business can't do the activity and the bank is not profitable. Number 2 is business has decided we do everything without compliance, and therefore we will achieve what we want. So meaning processes are designed and conducted in terms of there is no need for compliance validation. Yes, and you mentioned it rightly, the reputation risks comes then down, and the big question is how could that happen, that business has ensured this development, and where has been the compliance in the bank? Are these 2 examples real examples? No, they might not. But I think the situation in real life is even worse. Those ones who have watched one of my last episodes when it was about conduct risk know already what I'm talking about, is meaning that we had in the recent past in the banking 3 of the biggest scandals ever, with the LIBOR manipulation scandal in 2012, roughly turning up to a 9 billion fines, a lot of resignations from CEOs and major C-levels. We had in 2016 the Wells Fargo scandal, where the employees have offered massive account openings but not respecting at all the underlying risk provisions. So here we have the second example. And the last one, HSBC in 2012. And I could mention nearly all the biggest banks, so don't take that as a specific element. But HSBC in 2012 has been as well been condemned for supporting or not acting against money laundering elements with regard to activities in Colombia. 1.9 billion was the bill at the very end. So you can see whenever compliance and business are not playing the game, it has 2 main elements. Number 1, very often fines at the very end, and 2 as well, the loss of licenses. So that as well is to be conducted. So based on that, it would be better to play together. What do you think? So if we look a little bit on the regulation side, it's very easy. Meaning, and wherever you work in the banking sector, whether it is in Hong Kong, Singapore, New York, Switzerland, London, etc., you will face the same kind of principled approach that regulators or supervisors will await from compliance or from a bank, that they fulfill all the applicable regulations. We have seen a tsunami of regulations coming up, especially after 2008, second wave has come quite recently, so there is this expectation and honestly nearly a zero tolerance approach when it comes to specific topics. Take for instance the FATCA element when it comes to US nexus. Take the sanction part as well, where banks are really exposed not on a risk-based approach but on a zero tolerance approach to abide exactly and strictly to the multitude of regulations which exist. So the question is, how in this clearly kind of regulatory framework compliance can help business? I think it's mainly driven of how do we see compliance. If we stay a little bit in the infinite game mindset of Simon Sinek, or we take a football game, compliance is defense. Have a look on my video on why compliance is a good goalkeeper. You will see what I mean. Meaning compliance officers are normally quite aware of the regulations and how to play it, but from a defense point of view, meaning we don't get a goal, but we will certainly not help the offense to make a goal. That's not our role. And here might be the biggest crux in the game where we could step in and be a game changer for business. So, but what we can already observe for quite a long time in the meantime is that banks are more and more looking forward in terms of how to get compliance as well as being part of the total game, not only on the defense sector, but in terms of participating and contributing to a profit generation of the bank. And that, I think, is the question is now, how do I get compliance into the financial game? And being honest, if we look already in terms of our annual setting of the expectation and target setting, there are already a lot of expectations when it comes to profitability, etc. And we come to that at the end of this episode in terms of what I think we should strive for when it comes to compliance, key risk indicators or performance indicators. But the truth is, we are already part as a compliance of the business game and being as well associated to the profitability of the bank. So if that is the case, then I think the underlying real question is of how can I transform compliance from the current activity within the strong regulatory framework, within the capacities that we had in the past as compliance education, training, where we're coming from, towards this collaborative, supporting, even business generating or enabling element. So here I think I have 3 strategies to propose. So listen carefully. So number 1 is client orientation. Why do I mention that? Because regardless of for what bank you're working, I think mostly you will be always hearing the word of client focused, client orientated. What is the client's journey in the bank? And taking that into consideration, let's have a focus on our main compliance topic, which is KYC, know your client. And very often when you transform the know your client not only into a regulatory framework, meaning I have to obtain as a bank source of funds, source of income, source of wealth, global wealth, professional background, etc. If you ask the question, with this information, can I not enrich it from a business perspective so that even my front teams can benefit from that? Meaning, is my client, for instance, going for an IPO? Is there an inheritance or a succession or a wealth planning foreseen? These are elements which are very important for me as a business owner of the relationship and for the compliance part as well in terms of what are the upcoming elements? Do I need to change forms, etc. of big importance to know? So that is already number 1. Take the know your client in terms of an interoperable activity or form for compliance, but as well for business. Number 2 is, and I think very often people forget that compliance has a protective element. That's for sure. But I can tell you, clients really will look out for banks which have a very well functioning compliance function because they do not want to appear in any kind of press articles, videos, news, where the bank is mentioned of being not respectful with regard to AML obligations or whatsoever. So the protection of compliance is finally and ultimately very often as well a protection for the final client, meaning if the compliance is working correctly, your client is well protected. Not that we can really sell that in terms of an additional fee, like we didn't encounter any kind of compliance problem, so you should pay for us for that one. But in terms of staying out of the wave of banks who are fined or come under reputation screening, I think you can really take out here a winning stream by saying we organize our function so that the client ultimately is protected. And last but not least, it's as well the smoothness of onboarding or review processes. Nothing is more burdensome if you reach as a business person at least 3-4 times out to the client to get additional information, whereas you could get it with one shot in one spot. And so here as well, if both functions, business and compliance, do interact already from the beginning, then already you gain something because you have less interactivity with the client. And number two is when both are organized perfectly, and we all know that we go into a digitalization more and more, not only the internal processes, but as well with the onboarding processes. So most of the banks already, you can onboard that with a nice app. And so basically, if in these apps already the compliance focus elements are embedded and turned already active, then it is already for the client a much more smoothness in this onboarding process, and it avoids this back and forth, which of course could hinder and very often is not really contributing to the client's satisfaction. So that's, I think, number one, client focus. Number two is go out of the comfort zone. What do I mean by that? Meaning invest in evolving areas. We have seen a lot in the recent past, for instance, in technologies like blockchain. Even compliance tools are equipped with this kind of technology, which enables you then in a real-time perspective to obtain information either from the client, counterpart, etc., and embed that in your own system. The truth is, however, that only very few of compliance officers are well aware of what are the technologies, what is the underlying data, how is the process working, what are the existing compliance regulation. I did a whole exercise on technology and AI in compliance. So if you're interested in that topic, have a look in this one. So if we take, for instance, the artificial intelligence technology, which has more and more come to life in the transaction monitoring, here as well, the possibility or the obligation of compliance officers have changed, meaning then the AI takes over to a certain extent for defining the algorithms and the underlying processes. However, the compliance officer has to ensure that that becomes not a black box model, meaning that algorithms are defined by AI, whoever that is. And then whenever there is a question from the supervisor, that we are a little bit blindfolded in terms of what's the underlying rules and why we have configured the systems as such. So I think that here as well is very important to mention. And that normally should be overcome if you designate already one of your compliance team members as the person to go to with a specialty in terms of being together. Very often already when you implement processes, that should be the person that should sit together with business operations in terms of being part of it. And what does it mean as well is this compliance person will need as well dedicated training and education to be up to speed whenever it comes to these kind of technologies. Number three is higher resilience in disruptive times, in particular when it comes to geopolitical tensions. We're living in times where, unfortunately, the world is shaken still by, even in Europe, by wars. Here, for instance, Russia and Ukraine. And those of you who are working in particular in the so-called CIS market have seen that a lot of banks have immediately stepped out of that activity, did not continue, for instance, any relationships with Russian clients to a certain extent. And that, of course, has contributed to a real shifting within the market, that suddenly as well whole jurisdictions have been left by clients and shifted towards other jurisdictions. Now, it is clear that you can't never predict what is happening in terms of the geopolitical situation. What you can do, however, is putting already teams into place, like we did in the past with the so-called financial intelligence unit, where you look in terms of how risk scenarios are working, or what happens if you have states, for instance, that are close to a changing point. You can as well ask yourself how political elections will impact that. Those ones who didn't see that, I did a whole episode on 2024, the year of the election, or the year in the dragon's eye. So have a look on that one. This is political forecast, or in terms of, is my system and my framework resilient if A or Z is happening? And I think that is something that in particular will need to work together between strategists, business analysts and strategists of the bank, as well as compliance officers, in terms of bringing them together and finding a solution in terms of activating a plan. We have that already if we talk about a business continuity plan, meaning what happens if we have an electricity fallout, cyber attack, whatsoever. How do we work? The same could we apply in terms of if a so-called disruptive element hits our client portfolio, how to deal with that. So this is number 3, be resilient with regard to geopolitical tensions. So we have 3 elements that we wanted to tackle: the client experience, the new technologies, and the resilience with regard to the geopolitical situation. Now, what are my 3 advices to this one? I think advice number 1 comes as well from the Simon Sinek Infinite Game, is choose collaboration, meaning close collaboration between compliance and business at a very early stage in the process is super key important. What do I mean by that? It does not only mean operational collaboration between officers, compliance officers working, for instance, in the sanctioned field directly related to the Russian desk of the business. It means already tone from the top, that even the top management has clearly indicated where we want to go and what are the elements. And I think as well we see it, and I can only witness that from my past, whenever you have already a collaboration model in place on the C executive level, where the head wealth management or private banking is talking to the chief compliance officer directly, and not only when things are burning, but in terms of, hey, how would you see the future on this one? Or can we not design a process for that or that event? Then things are becoming really often high importance. So collaboration is the highest demand in this one. And number 2 is, from my point of view, the right talent recruiting. And that doesn't mean that you just only recruit compliance officers, because did you know that based on a McKinsey survey, 90% of risk and compliance people do not have a risk or compliance background? What does it mean? They're coming from other functions. Very often you have this trespassing, as I call it, from business to compliance, but as well vice versa. So that might be for the second group a little bit more difficult to transform a compliance officer into a business chaser or hunter, as they're called. But on the other hand, very often we see that, for instance, compliance people are the perfect animals afterwards to live in the twilight zone, which is business risk management, for instance, where both worlds are to be combined, the business analytic part, but as well the compliance part. And vice versa is the same. So I looked as well, when I recruited my teams, to get as well people that beforehand were working as an assistant relationship manager manager, for instance, or even as an advisor on specific products in the business part, because they know of how the business is working, they know of what the business needs, and therefore sometimes if you switch their position, they're the best persons to help you to come to the vision of a profitability. And the last one, in terms of how do we achieve that competitive factor for compliance, is we should not always, as I mentioned in the beginning, look for just purely business-related key performance indicators. We should, and I think even the regulator should more look out of how can I design and have compliance-driven indicators when it comes to question of high-risk clients. How many regulatory requests did I have? How many SARS filing I had to do, etc., which sometimes comes, as of today, into an expression when we do a self-risk assessment, but unfortunately not into a dedicated larger risk appetite, where we say it's exactly what we want to have on this ground. So, and why did I mention in the beginning Simon Sinek and the Infinite Game? You should read that book. It's fantastic. It is because we are chasing not only profitability or competition on a short notice, but really on an infinite game notice. We are looking from a compliance perspective to be in the game. Of course, to give profitability to the bank, and we are working for a bank to make the bank within the risk appetite and the possibility of eliminating and reducing reputation and compliance risks, but meaning making the bank on a sustainable level profitable, and as well to enhance the process. Therefore, I think that the infinite game or the infinite mindset for a compliance officer, even for the profitability of a bank, is a huge advantage. So that was it for this episode. Thank you again for joining me in this compliance YouTube channel. Looking forward to see you soon. If you have any questions, raise them with me. You want to see me on a specific topic, be my guest. And looking forward to see you soon on one of my next episodes, Thinking and Impacting Compliance Differently.